Well, Asian markets, they trade higher following strong gains that we saw on Wall Street in the overnight session. Speaking on the US-China trade talks, US President Donald Trump said he was open to postponing the March 2nd deadline for tariffs. That's if Washington and Beijing, they can't reach a trade deal soon. So good news coming in overnight. You have the Nikkei that's up close to around 1.3% as well. The dollar yen continuing to hold at around the 110.5 odd mark. But it's not just a developed market like Japan that's doing well. You have the Kospi as well that's up nearly around 0.4%. And the other couple of markets as well did come in higher. In fact, the first tick has been well in the green. We have Japanese data as well that's flashing for you on the screen. I think the inflation data is a little better than what the street was working with. They put all the cues down together, and the SGX Nifty suggesting maybe we'll see a 15 to 20 point bounce back after yesterday's selling that we saw, particularly in the last hour of trade.
All right, then let's talk about the U.S. markets. On Wall Street, stocks rallied amid news that U.S. lawmakers had secured a tentative deal on border security funding. Additionally, improved prospects for a U.S.-China trade deal also boosted equities. The Dow Jones rallied more than 350 points, while the S&P 500 ended above its 200-day moving average, and Nasdaq advanced 1.5%. CNBC's Aditi Roy gets us a wrap of all the action on Wall Street.
Stocks rose amid news that U.S. lawmakers had reached a deal on border security funding. An improved outlook on a U.S.-China trade deal also boosted stocks. The Dow rising 372 points, led by trade-sensitive stocks like Caterpillar and 3M. Deere also rose. The S&P rising 34 points as materials, consumer discretionary, and financials outperformed. And the Nasdaq went up 106 points. Shares of Amazon, Netflix, and Alphabet all rising more than 2%. Shares of big banks gained broadly. Goldman Sachs, Citigroup, and Morgan Stanley all rose at least 1.6%. Bank of America and JP Morgan also gained at least 1%. And Activision shares declined after reporting Q4 earnings. The gaming company reported earnings of $1.29 versus expectations of $1.28, so a penny beat there. But the company missed on revenues, reporting $2.84 billion versus expectations of $3.04 billion on revenue. Activision also missed on full-year and Q1 earnings guidance. And during the earnings call just now, the company announced it would reduce headcount by 8%. So big news coming out of that gaming company.
On that note, here is some opinion from experts on the ongoing U.S.-China trade talks and the markets going forward.
Intellectual property, state-sponsored industrial policy like Made in China 2025, the cyber issues. Those are all really tough issues. It doesn't look like we're going to reach agreement on those by March 1. Most likely that means that the tariffs that were slated to increase significantly March 1 will not go up until Trump and Xi Jinping have a meeting later in March. But they could go up if they don't reach a meaningful agreement on those tough structural issues.
We're having a real slowdown. I think the quarter we just passed, 4Q, probably when all is said and done will come in nearly at 18% year-to-year growth. When you take a look at earnings estimates out into the future, they tend to show too much growth. Those growth rates come down. The end of the year 10% EPS growth may in fact be too high, but they're partly too high, again, because the near-term estimates are too low. So the reality is the American economy, the world economy is moderating for a lot of reasons, 9 rate hikes. We will see a slowdown in corporate profit growth with it. But I think all of the estimates are going to show that we're going to end up with something like a 5 to 6% EPS gain for the quarter we're in right now.
Let's face it, we had the worst December since 1931. Little surprise, we had the best January since 1987. So, stocks have done what they do, which is they overreact in both directions. If we actually break down what's driven it, though, earnings season has been okay. It's kind of been a high watermark in our view, but if you look at forward earnings, they're drifting down to the low single digits. Yes, the Fed are on hold at the moment, but the reality is, have they finished hiking? Look, if we look at Main Street in the US, it's doing just fine. Probably the balance of risk is that the next Fed move will still be to tighten further. If we look at the underlying data in the US, it's okay. So let's face it, multiples will struggle to expand too far. Low single-digit earnings, multiples where they are. Chances are, could be a reasonable but not spectacular year for stocks. And
Well, in Europe, the markets closed higher on Tuesday. In fact, as investors monitor trade as well as political developments, the auto stocks, they led the gains on the back of earnings and optimism over the US-China trade talks. Though on the Brexit front, that's going to be the crucial monitorable. UK Prime Minister Theresa May said that she needed some more time to complete the process with the European Union, but lawmakers will be able to vote on Brexit process by February 26. On the back of all those cues, we had all the three frontliners ending well in the green.
Well, in the currency space, the dollar edges lower against its peers as rising expectations of a breakthrough in the trade impasse between the United States and China led investors to put money in other Asian currencies.
Well, in the world of commodities, and crude oil prices rise after the OPEC figures showed that it cut production sharply in January, and Saudi Arabia said that it would reduce its output in March by an additional 500,000 barrels.